Hi everyone, this is Victor here. Welcome to the Intelligent Investor channel. At the time of making this video, Salesforce stock is down 38% from the most recent peak. During this period, most software as a service stocks are down more than 30% from their most recent peaks. The Nasdaq is still in a large bear market and is down 25% from the most recent peak. You may want to know, is Salesforce stock undervalued now, and is Salesforce one of the best long-term growth stocks? I will answer these questions in this video by talking about these topics. First, Salesforce business overview. You learn about how Salesforce earns its revenues. Second, Salesforce economic moat and long-term prospects. Third, Salesforce biggest risk to consider. Fourth, Salesforce stock valuation. You will learn about how to calculate Salesforce stock's intrinsic value per share. And fifth, will I buy Salesforce stock? If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and investing videos every week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog in the video description and become a premium member. Our goal is to create the best intelligent investor community that will help all our members grow their stock portfolios to over 7 figures over time. With your support, we'll be able to stay independent, hire other outstanding analysts to cover different stocks, and create many excellent stock analysis and investing videos every week that will help you become a great investor. The link is in the video description. Take a look, let's start. If you're a long-term investor, you want to know how Salesforce earns its revenues and its biggest competitive advantage. Salesforce is the #1 and the leading cloud-based customer relationship management CRM company in the world. Salesforce is most well known for its CRM applications ranging from sales to customer support, marketing, commerce, data, and AI-driven analytics. Salesforce's main product is its Customer 360, which includes Sales Cloud, Service Cloud, Marketing Cloud, Commerce Cloud, Data Analytics, Slack, App Exchange applications made by other developers, and all these cloud services you can see here. Most of Salesforce customers are small businesses, large enterprises, and Fortune 500 companies. Salesforce currently has over 150,000 paying customers. Here is the important part you want to know. This is one of Salesforce's biggest competitive advantage. All Salesforce services are delivered through a web browser or a mobile app. If you're a Salesforce customer, you can access Salesforce Customer 360 applications anywhere using any device as long as you have a web browser. This is a huge advantage for many businesses because they do not need to invest a lot of money upfront to develop their own CRM applications and IT infrastructures. Instead, many businesses can save a lot of money by subscribing to Salesforce Customer 360 applications by paying subscription fees every month. For example, if you want to use Salesforce cloud applications, you will pay $25 to $300 per month per user. Some of Salesforce cloud services are as high as $1,250 per month or $40,000 per month. Salesforce has another competitive advantage. Salesforce has over 8,000 developers making thousands of apps on Salesforce App Exchange platform. At the time of making this video, there are over 3,000 apps on Salesforce App Exchange platform. Salesforce App Exchange is similar to the iOS App Store. Salesforce App Exchange platform lets developers make and publish their apps for other businesses and enterprises to use. In my opinion, Salesforce App Exchange platform is a huge advantage for Salesforce because it makes Salesforce CRM applications much more sticky, and it makes it harder for Salesforce customers to switch to other competing CRM services. I believe this is one of the main reasons that Salesforce has a very low revenue attrition rate. According to the latest earnings here, Salesforce revenue attrition rate was between 7% and 7.5%. In my opinion, this is a very low revenue attrition rate. As I talked about earlier, Salesforce earns most of its revenues from subscription services consisting of Customer 360 applications. For example, if you look at the latest financials here, you can see Salesforce earned 93% of its total revenues from subscriptions. The other 7% of total revenues came from professional services. In the past 10 years, you can see Salesforce had very consistent revenue growth, operating cash flow growth, and free cash flow growth. Salesforce tends to have a very low operating margin every quarter because Salesforce has very large large non-cash amortization expenses and stock-based compensation expenses every quarter. Again, these are non-cash items. For example, if you look at the latest financials here, you can see Salesforce GAAP operating margin was only 0.3%, but its non-GAAP operating margin was 17.6% after adding back the non-cash amortization of purchased intangibles and stock-based compensation expense here. In my opinion, I believe Salesforce revenue growth, operating cash flow growth, and free cash flow growth are much better representation of Salesforce growth. Salesforce has a very resilient business model that should still perform well in most market corrections and recessions. For example, in the latest earnings call, Salesforce management said this, explaining that Salesforce has a very resilient business model. We're carefully watching the economic data. I know all of you are doing that as well. So far, we're just not seeing any material impact on the broader economic world that all of you are in. Our demand environment, the demand is very strong. If you look over the last 23 years, Salesforce has proven to be incredibly resilient based on this incredible business model we have, an incredible technology model that we have. We have been through all kinds of dot-com crashes and recessions and financial crises and global pandemics, and all of you have watched us go through every possible storm, but we continue to weather these storms through the power and strength of our model. In 2001, I think it really impacted us. We almost lost our business because we were on monthly contracts. We didn't have the right cash flow structure. Investors just wouldn't give us any money, so we made a lot of changes then. It's really strengthened our business and made us more durable over time. There's now no better measure of our durability of the business model, the momentum of the business, the strength of the technology model than our remaining performance obligation, the future revenue that we have on our contract. In Q1, we had 42 billion in remaining performance obligation RPO, up 20% year over year. Pretty amazing. In every crisis we have experienced over nearly a quarter of a century, I'll just tell you I think that Salesforce, and I'm sure you all agree, always emerged stronger than ever. We became more strategic and more relevant to our customers because we focus on their success, and that continues today. That's why we have been able to grow our revenue for 72 consecutive quarters. Through every cycle, a focus on customer success, and it's why Salesforce remains the #1 in CRM now for the 9th year in a row, growing in share in all CRM segments yet again according to the IDC software tracker. And our business model, as Mark said, is durable. It's diversified across the industries, regions, lines of business, ensuring we're resilient in the face of any economic cycle. When it comes to investing, we have to be forward-looking, so let's talk about Salesforce economic moat and long-term prospects. According to Morningstar, Salesforce has a wide economic moat, mainly from Salesforce, high switching costs and network effect. In my opinion, I believe Salesforce does have a large economic moat because many sales organizations already use Salesforce Sales Cloud, Service Cloud, and other Customer 360 cloud services in order to increase their sales, attract more customers, improve sales processes, retain customers, and improve customer support. For example, according to the latest data here, Salesforce has been ranked the #1 CRM provider for the 9th consecutive year. In 2021, Salesforce had a market share of 23.8%. Salesforce's market share had been growing consistently in the past 5 years. In comparison, Salesforce's biggest competitor had much lower market shares. SAP had a market share of 5.4%, Microsoft had 5.3%, Oracle had 5.1%, and Adobe had 3.8%. Based on what I know, Salesforce has the most comprehensive cloud-based CRM applications compared to other competitors. I believe this is one of the main reasons many large businesses and Fortune 500 companies use Salesforce cloud services. It is not easy to switch from Salesforce to another CRM provider because you will need to retrain everyone to use new applications, which is very time-consuming and costly. Also, you will need to move a large amount of data from Salesforce to another CRM provider, which can be very costly and risky. Based on what I know, many businesses are consolidating their CRM vendors in order to save costs. Management said this about customers consolidating their vendors. If there's a consolidation of vendors with our customers, I think we're extremely well placed. We are the only ones with the customer 360. There's nobody else in the market that's able to offer the full suite of clouds. There's one very important metric that indicates Salesforce's future revenue growth. Salesforce remaining performance obligation, or RPO, shows Salesforce all future revenue under contract that is not recognized yet. At the time of making this video, Salesforce remaining of performance obligation is $42 billion. You can see Salesforce remaining performance obligation has been growing consistently almost every quarter here. At the time of making this video, the US economy is heading to a recession because the US Fed is raising its interest rate aggressively and tightening its monetary policies to fight inflation. Even though we're likely heading into a recession, this consistent growth here shows that Salesforce has a very resilient business model. I believe the main reason is that Salesforce cloud-based CRM services have become mission-critical applications for many businesses, especially sales organizations. Even when the economy is heading into a recession, all the major companies and large businesses still need CRM applications in order to increase their sales, attract more customers, and retain and service more customers. Salesforce management said this about Salesforce remaining performance obligation. There's no greater measure of our resilience and the momentum in our business than the $42 billion we have in remaining performance obligation, representing all future revenue under contract. While delivering incredible growth at scale, we're committed to consistent margin expansion and cash flow growth as part of our long-term plan to drive both top and bottom line performance. According to the latest Salesforce Investor Day, Salesforce is aiming to achieve $50 billion in revenue by fiscal 2026. At the time of making this video, Salesforce expects its full-year fiscal 2023 revenue will be $31.7 to $31.8 billion. This means Salesforce revenue will need to grow about 20% each year from fiscal 2023 to fiscal 2026 to achieve $50 billion in revenue by the end of fiscal 2026. In my opinion, I believe this 20% revenue growth each year is achievable for Salesforce. Just to compare, Salesforce revenue had a compound annual growth rate of 25.86% in the past 3 years and 25.79% in the past 5 years. Salesforce has two main growth strategies. The first growth strategy is growing Salesforce revenue organically, expanding operating margin, and increasing cash flow. Management said this about its growth strategy going forward. As all of you know, we're quite committed to consistent margin and cash flow growth as part of this long-term plan and model that we have to drive both top and bottom line performance. As I said, this demand environment for our Customer 360 platform, as you're about to hear from Brett and from Gavin and from Amy and from others, well, it remains incredibly healthy. The second growth strategy is growing revenue through acquisitions. According to this article here, close to a decade after its founding, Salesforce also started to use the inorganic growth method of acquiring companies. From 2008 until 2021, Salesforce has acquired 21 companies. Notable acquisitions include companies like Slack, Tableau, MuleSoft, and more. At the time of making this video, Slack is still Salesforce's biggest acquisition at $27.7 billion. Salesforce management said this about not focusing on major acquisitions at this moment. But for us, we have kind of laid our acquisition strategy down and we're done for a while. You can see that with many of these amazing companies that we acquired with MuleSoft, with Tableau, with Slack, or even what I just mentioned with Commerce Cloud, with Demandware. And the reality is there's no finish line when it comes to these acquisitions. They're a lot of work. They're hard to integrate. When you think you're done, you're not done. They can surprise you. You have to take your time with them. We have realized that right from the beginning with our first exact target acquisition to today. I would say that for right now, we're not really looking at doing any major acquisitions. It's just not a part of our playbook now. We're really focused on integrating the ones that we have. We have a lot of work to do still, and that's our primary focus. Salesforce does have several major risks we should consider. The first major risk is that Salesforce revenue growth will eventually slow down. Historically, Salesforce revenue grew at a compound annual growth rate of 25.86% in the past 3 years, 25.79% in the past 5 years, and 27.52% in the past 10 years. Going forward, we should expect Salesforce to have much lower revenue growth rates than before. Realistically, I expect Salesforce revenue will grow about 15% to 20% each year between now and fiscal 2026. Salesforce is aiming to achieve $50 billion in annual revenue by fiscal 2026. This means Salesforce revenue should grow about 20% each year between now and fiscal 2026. The biggest risk is this: if Salesforce revenue growth slows down significantly below 20% each year, it will take Salesforce revenue longer to reach $50 billion. Lower revenue growth than expected will lead to lower stock valuation. The second risk is that Salesforce will continue to have a very low GAAP operating margin every quarter because of the large amortization of purchase intangibles from acquiring businesses and the large stock-based compensation expense every quarter. The amortization of purchase intangibles and stock-based compensation expenses are non-cash expenses. Salesforce management mainly focuses on non-GAAP operating margin. Salesforce non-GAAP operating margin is much higher once we add back the non-cash amortization of intangible assets and stock-based compensation expense. The third main risk is a short-term risk. At the time of making this video, Salesforce fiscal 2023 revenue guidance is impacted by the strong US dollar. Salesforce earns a large amount of revenue in foreign currencies. For example, because of the foreign currency headwinds, Salesforce had to lower its fiscal 2023 revenue guidance by $300 million to $31.7 billion to $31.8 billion, or about 20% growth year over year. Let's calculate Salesforce stock's intrinsic value so we know whether Salesforce stock is undervalued, fairly valued, or overvalued. I always use this intrinsic value calculator here to calculate a stock's intrinsic value. If you want this calculator, you can download it in my Patreon blog in the video description. Here are the key assumptions. First, I define Salesforce intrinsic value as its future cash flows discounted to the present day. The discount rate is 11%. This is higher than the 8.5% cost of equity from Finbox.com. I use the high discount rate here to be more conservative. Salesforce trailing 12 months of revenue is $28 billion. Based on the competitive advantage and the long-term prospects I talked about earlier, I believe Salesforce revenue will grow at a compound annual growth rate CAGR between 15% and 20% over the next 5 years. Salesforce free cash flow as a percentage of revenue has been very stable at around 20% in recent years. I expect it will continue to be around 20% over the next 5 years. To calculate the terminal value at the end of year 5, we're using both the perpetual growth and exit multiple models here. Then we take the average of both models to calculate the terminal value. Let's go over these 3 case scenarios: worst case, normal case, and best case scenarios. Under the worst case scenario, we're using compound annual growth rate CAGR of 15% over the next 5 years. If we forecast Salesforce free cash flow for the next 5 years and discount the free cash flow to the present day, Salesforce intrinsic value should be around $184 billion for the entire company, or $184 per share. I'm giving this scenario a 25% probability here. Under the normal case scenario, we're using compound annual growth rate CAGR of 17.5%, which is the midpoint over the next 5 years. If you forecast Salesforce free cash flow for the next 5 years and discount the free cash flow to the present day, Salesforce intrinsic value should be around $204 billion for the entire company, or $204 per share. I'm giving this scenario a 50% probability here. Under the best case scenario, we're using a compound annual growth rate CAGR of 20% over the next 5 years. If we forecast Salesforce free cash flow for the next 5 years and discount the free cash flow to the present day, Salesforce intrinsic value should be around $296 billion for the entire company, or $226 per share. I'm giving this scenario a 25% probability here. If we add all these numbers here, Salesforce intrinsic value should be around $204 per share. This means I believe Salesforce stock is undervalued by around 19% at the time of making this video. In comparison, Morningstar estimated Salesforce fair value to be much higher at $305 per share. This means Salesforce stock is likely substantially undervalued at the time of making this video. So will I buy Salesforce stock? My answer is yes. I already have Salesforce stock in my portfolio. I bought it last year. It's down 27% at the time of making this video. I'm not worried about it because I believe Salesforce is substantially undervalued. I will likely buy more Salesforce stock going forward whenever it becomes substantially undervalued because I believe Salesforce is one of the best software as a service companies with a very strong and resilient business model. Based on my estimate, I believe Salesforce stock's intrinsic value is around $204 per share. This assumes Salesforce revenue will grow between 15% and 20% each year over the next 5 years. I will update Salesforce stock's intrinsic value every quarter. If you want the latest intrinsic value updates, you can download it in my Patreon blog in the video description. Now, all these are only my opinions and my analysis based on my research. They are not financial advice. There are always risks associated with investing. It's important to always invest in what you know and not speculate. You will need to do your own research and do your extra due diligence first before investing in anything. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.